All right, looks like we're live. Hi, Ken. How's it going, man?
Doing well. Got my coffee here. I see you've got some sort of drink with ice in it. So
Yeah, that's correct. It's a different time zone here. I'm mid-afternoon or kind of 1 o'clock Central Time. What are you still early in the morning?
we're 8 a.m. So it's a 8 a.m. in Maui from the Westin, but found a nice spot and got a good view in front of me and looks like a pretty decent view behind me. Even you can see a little bit of the pool. So
Yeah,
it's
that's
it's
cool.
pretty sweet setup.
That is
So
a sweet setup.
how's the lake at Oklahoma?
It's good. This is Grand Lake, so my in-laws have a house up here, and we try to make it up, and it's nice because we're right on the dock, which is good. We're right on the water, which is nice, and so it's a good spot. I mean, we haven't been up last year during COVID. This was amazing because we could come out here and get away, and it was just a great place to escape. And then this year, we haven't come as much. This is actually our first time down here, so it's been fun. It's good to relax, especially for the 4th of July. It's going to get wild. It'll get really crowded.
Yeah, it's definitely Hawaii is hotels are 100% open and the restaurants and everything are at 50%, but waves are good, beaches are good, and did some hiking, zip lining. It's been a great trip. 2 more days in the 50th state in our union, so I got no complaints.
Yeah,
Actually,
there you go.
looked this morning, so recording on the second. Looks like the markets are continuing to go up. Like S&P trying to hit all-time highs. Oil's holding in. Natural gas is killing it, and
Yeah, yeah.
Bitcoin has kind of bounced back as a lot of the crypto has kind of come back a little as well. So yeah, it looks like I took a good week off. Maybe I'll stay away for a little while longer and let
We're
things just continue to work.
we're in a bull market, David. It feels good.
Yeah,
Feels good.
no, it's definitely
I
bull. I mean, we got inflation. That's the one thing you got to just watch for. We'll see how things go, but I'm pretty optimistic on the long term.
yeah.
People want to get out for sure.
Yes, they do. I think demand's going to pick up. It's interesting, natural gas. I've been watching it pretty closely this week. I'm long nat gas with our physical marketing business, so we do have some percentage of proceeds type arrangements, and so it's interesting. I keep a watch on it, and even in basin, like I'm in Oklahoma, and we have a lot of production here with our clients, and man, it's just been ridiculously strong, and the weather has been temperate. I mean, it's been these last couple of weeks. It's been rainy. I think it's going to heat back up again, and so I'm kind of even the intrastate markets with it being pretty temperate weather, 80s, kind of rainy, 70s in the middle of the summer, it's still been 360, 350 in basin. And it's like, man, if it was 100 degrees
Hmm.
outside right now, I just, who knows? It just seems, it's positive. It's nice to have that summer strength. We've seen it a few times in the winter the last couple of years, but man, getting that summer price strength feels really, really good. Great for producers, great for the industry. So we'll see how long it can run. But like I said, it feels good to be kind of in a bull market. It's a weird feeling given the last couple of years.
Yeah, we definitely are. I mean, energy is the best performing sector in the S&P 500, and I think it can continue to do well through the rest of the year. I mean, I still have a north of 90 oil price in my head, and I mean, if we see inventory draws through August and into the fall, I could be too low. I know I've been saying that for a month. Oil keeps doing pretty well. It's nice to sit at 75, but I think we've got actually more upside. And the amount of capital constraint that we have in the sector for the last, forced by commodity prices and now by discipline, like it's just there's some legs, I think, given the amount of demand recovery we're seeing. So it's gonna be good. I have no complaints, none at all.
Yeah.
So
So
what do you
4th of
think about?
July, go ahead.
Yeah, that's what I was just wondering. What are y'all doing for the fourth?
Well, I got little kids, so it's hard to, there's some big 4th of July fireworks here, but you got to get out on the boat. It gets a little sketchy at night with all the boats on the lake. We've done it in years past.
Hmm.
It's really fun, but and then the little ones are a little bit scared of the fireworks. So we'll see. We might do some around here. I bought some this year. We're gonna set a few off, just kind of some small stuff here at the cabin, and I don't know, we're going to hang out at the lake. We'll probably be here through Monday. But what about you guys? Any plans in Hawaii, or do you usually travel like this on 4th of July, or is this kind of
No,
is this not typical?
this is atypical. We actually land back in Houston on 4th of July. We're doing an overnight flight, and then I got some work to do next week. few big announcements coming, and it's going to be an exciting week for me and my firm and everything that's happening. So I got got a busy week in front of me, but still a few more days of relaxation. But yeah, we'll probably end up watching. Actually, my son loves Hamilton, and so I was thinking about it like, you're a guy from Oklahoma, a guy from Missouri. We both took our shots, and so I'm sure we'll catch a little bit of history, and watch Hamilton on live. So that'll be good.
That's good.
Big,
We saw it in New York a couple of years ago, and I thought it was really good.
Yeah, we caught it in
great.
Houston. I can't wait for plays to start again. Like that'll. I'm looking forward to my first trip to New York. I can't believe it's been really since January of 2020. It's the longest streak, since I was, you know, since the 1990s, which is wild.
Yeah.
It's kind of
Yeah,
crazy.
it was weird. It was like it was the last trip my wife and I took before COVID hit. We were there in like November. We were there in November of 19. We spent a week there, and then a few months later, everything kind of shut down, and it was crazy because New York was kind of the center of a lot of things, and we're like, that's wild. That was the last trip we were just on. So the last few years I've been going at least once a year. It's a great place to go. Certainly, in terms of this nation, a city that's kind of embodies this American spirit in a lot of ways. Historically, it's one of the, this huge city, and it was a cool place to see a play like Hamilton. But when you told me that you wanted to have the theme Independence Day, one thing I was like, how do I tie this to energy? And so maybe just talk a little bit about energy independence and what we have in this country in terms of the sovereignty. It's pretty sweet. If you look back at like the different, the world wars, like World War II, we talk about, I'm kind of a history buff, and some of the reasons why we were able to have the sovereignty that we have and have been successful as a nation is because of the great resources here. I'm also a little bit of biography nerd, and I've read, I'm almost finished with Titan, which is the Rockefeller biography. I'm listening to it on Audible, and I'm about 6 hours left, and it's a long one. It's like 30 something hours.
No, it's a monster.
So it is. I'm in the part where they're talking about all this philanthropy stuff with the medical side and the donations that he did. But that book just is great because it talks about the early days of oil in this country and the way that we were able to have this great resource and how it not only changed the U.S. but the world. I mean, we were exporting and doing all these things, and his story resonates with me because he was an infrastructure guy on the refinery side, and then with midstream, and then ultimately vertically integrating. I think he was kind of the pioneer of vertical integration, and so that's been a great history. But it just is cool to think about the history of energy in this country and the independence that we have. I know probably wasn't as big a factor during the Revolutionary War, but since then it's been a huge factor, and so that's something that I am thankful for and grateful for in this country, and that we're very fortunate to have. So when you think about Independence Day, I try to tie it back to energy, and that's something that I gotta think. It's nice to have that energy in this country, and we'll see how we play it moving forward with the way things are evolving.
No, it's interesting. I mean, we're on Kauai at first, and they're essentially an energy independent island through solar and biomass now.
Wow.
As their
I didn't know they were doing that much
as their
biomass.
base fuels. Yeah, they've actually got a bunch of forests that they harvest and then regrow, and so it's that cyclical little plug for a company we follow in Viva EVA MLP that is a leader in biomass. But yeah, you're right. Like, it's pretty amazing. You think about what we've been blessed with. Each region of the country has its own ability to be somewhat independent, and the shale revolution, which may have destroyed a lot of capital, definitely revolutionized the world and kind of changed geopolitics forever. It's good that we both got to participate in it, and I think we've got another 20 or 30 years of hydrocarbons still in front of us. So plenty of career left for me and for you, and we'll just keep rolling because there will be a call on the U.S. again for natural gas in particular, but also crude oil. So it's going to be.
We got a lot of it. We're victims of our own success. I mean, I know we destroyed a lot of capital, but it's just it gets back to that deflationary thing. It's like you get so good at a technology like horizontal drilling and hydraulic fracturing, and then it becomes it's kind of and I saw it being at Chesapeake and seeing that huge discovery of nat gas that Aubrey was able to unlock all these resources, and not just him, a lot of other guys, but it pioneered that space. And then you underwrite it to this world that you know, but you don't realize is that technology is taken to you to a totally world that's totally different, and then prices collapse, and it's good for the consumer, not so good for
Yeah.
the capital that's coming in
Well,
when that
I
happens.
mean, I think though now what we're going to see, and we kind of segue into consolidation. Like
Yep.
as the more efficient capital deployer, emerges, you've got to focus on costs. And we saw, and one little bit of reading I did was the Cabot and Cimarex proxy. It's just
Right.
interesting how
Right.
many companies are in there, and the fact that we believe Pioneer, Parsley, and Cabot, considered merging. Other than the Parsley guys wanting a premium, which backed Cabot out, that would have been a totally different company, with the big
Yeah.
Marcellus asset on top of the Midland basin. But I just think that you're going to see a lot more consolidation still. Like I don't see a reason why there's so many producers in the Bakken, the Powder River Basin needs to be consolidated. Oklahoma is kind of pretty far down the road with really Devon and Oventive, and Continental as the three biggest companies. But yeah, it's just cents per barrel is what needs to be worked on. So hopefully, hopefully we'll see some more,
Do,
and that'll
do
actually accrete value.
you think that the strength in pricing and how quickly it's come back and the V shape there, and if it continues to have strength, does that lean towards more consolidation or less does that speed up consolidation or slow it down, or would it be more consolidation if we kind of were more stagnant pricing and it hadn't come back up as quick as it has?
I think there's less fear, and so you think about the
Right.
big deals that happened, really kind of summer of last year that all consummated in September. I think there's definitely a whole lot of worry and fear still that caused management teams to take zero premium deals and really give up some options and opportunity. But it ended up with better companies at the end of the day. Um,
Right.
I think that an increase in commodity price, still there's this battle for relevance, and if you don't have enough market cap and enough liquidity, you're just not in that group of call it 5 to 10 companies that people are trying to buy, and so all
Right.
of these sub $2 billion companies just don't get most of investors' interest, and it's kind of hard for them to stay independent, I believe. So I think you'll continue to see that come together. Really, the biggest factor is not trying to make this. We have a governance issue somewhat in the group, but I've talked about this a lot. C-suites have given up a lot to get to the point where they were, and to
Yeah.
become a CEO of a business, like you have to put your your heart and mind and blood and sweat and tears into it, and then they saw their wealth just evaporate. And so I think a lot of management teams still are trying to rebuild, and that gap between the C-suite and the roustabout is too wide a pay gap. But I still think those guys and gals won a couple years of option awards, and that probably says this time next year, with the recovery and a little bit of sweetening of their own pay packages, they'll probably be more likely as well. I mean, I
Yeah.
hate to be that blunt, but it really is the reality. Um, Individuals are individually motivated, and
Right.
governance is probably the biggest thing that I think about for our space, and hopefully we'll get better.
Yeah, we'll see. I mean, I think that it'll change behaviors with the prices being like they are now. I think that there are more options, I guess is what I would say, versus
Hmm.
whenever you're kind of at like $50 or between 30 and 50, or even between 50 and 60, or 50 and 70. I think even in that range, I think it changes behaviors. I think you get 70 and above, certainly 80 or 90, like you've mentioned, you think it could go. Then now the universe changes in terms of capital allocation, what people can do, where people can go. Cash flows are obviously higher. We talked about it last week, and that changes it's a kind of a paradigm shift in terms of what these guys can do. And so it'll be interesting. I think that there will be more consolidation. I'm curious to see where it happens. I'm hearing rumors and seeing it on the private side as well, not just the public
Hmm.
guys. And so it makes a lot of sense, especially when we went through this era of all these privates, and you talk about management teams and incentives, and you had all these pods of management teams, and it's a lot of G&A. And if you look at like a private company and private company, the highest costs really a lot of times, or not the highest, but some of the biggest OpEx costs are management. And so if you
Hmm.
can consolidate that, and then, that makes a lot of sense for some of these groups. So I think we're going to see that, but I also think you're going to see guys probably trying to drill their way into
Yeah,
these
that's what I was going to
higher.
say.
They're going to drill their
No,
way
with
into these higher things, right? And then maybe look towards what the strategic alternatives are later.
right, with the cash flow, like that's the thing that a lot of private companies, and we just keep watching private rig count tick up, and that's the way they can get to scale. Like with higher cash flow, they can deploy the capital. You saw the smash co deals of a lot of private equity, but now you can
Yep.
develop the assets, have real production and real reserves on it, not just a lease flip. Then public companies are more likely to buy them as well. And so I think that that's going to be something that'll be interesting. As you listen to the privates, I mean, the majority of your clients are smaller. I mean, I how do you think
Yep.
through, your base business as things consolidate? Like, does that
It's good.
change things, or what do you guys
It's
do?
it's going to churn. I mean, like for us, it's interesting because there are pluses and minuses to the churn. And by the churn, I just mean moving and shaking, whatever that looks like, right? Whether that's selling an asset. We see clients that were, last year, just a quick recap on our business, we did a number of bankruptcies and helping companies kind of as they go through restructuring or bankruptcy, redo their midstream agreements, redo their downstream commitments, work for some uh, public company. We had a pretty high profile bankruptcy that we kind of did all the advisory for the downstream that had a lot to unwind there and kind of restructured some of that. Those are big liabilities. And then
Hmm.
on the private side, we had a couple of groups restructure and help them on the midstream side. And so there was a lot of last year was interesting because we got some of that work that was chunky and it was project based. But we also had a lot of guys, I mean, obviously wanting rate cuts. Any service company, people want rate cuts. And so that's no fun, but you do it. And then after you do it, there was a weird sense of stability though last year because in some ways the people just were it was paralysis, right? Like I think
Hmm.
not doing anything in 2020 was kind of a premium, right? Like people they did what they could to shore up their company, and some guys obviously had to restructure, which wasn't fun. But then for the rest, it was kind of like hang tight and cut costs and just sort of the stasis. Right? We were just kind of static. And then this year we're seeing things just moving, right? So we're seeing people looking at acquisitions, a lot of private guys trying to buy stuff, other guys potentially going to
Buying
merge,
upstream or buying midstream
buying
assets?
upstream. When I say guys trying to, I'm
Okay.
talking about upstream guys. E&P is looking at buying
Yeah,
additional
your
upstream
clients. Yeah,
assets, right?
sure.
And so that's good for what we do. We do a lot of due diligence, so it's helping
Okay.
understand assets on the front end. And so there's been a lot of that. And then you've got potential mergers, which if a client of yours merges with somebody, that's never good, but it happens. You never know. It could be good. Could get a bigger client. And then you've got guys maybe that are going to try to sell. And so when I say churn, I just mean just activity on the M&A
Hmm.
front with people. And I think that it brings opportunity. And so what I've seen historically is that when you have the downturns and when you have these times when things are taking off, you still can be busy and have activity and create value in different ways as an entrepreneur, but it just changes, right? Like the opportunity set changes. Like last year, like we're not doing not many restructures this year, right? Because people are healthier. And so now it's more due diligence and maybe mergers or maybe acquisitions of new things. So we'll see. I mean, it's interesting. It's always just change. I mean, that's the only thing you can say, right? Like, how it is being an entrepreneur. Like, change is kind of a given. And you try not to get too high or too low. You just kind of roll with it and figure out how you add value during all of it. That's kind of what we try to do.
Yeah, it's been interesting. Well, the thing that we watch, and one thing that I'll be curious about is, as you see these, like you said, the changes that are happening, like how and where does private equity raise more capital? Like, I think it's going to be interesting to see. Like, we've seen them raise, unconventional or energy transition funds, but like when do the LPs of the private equity guys want to put more capital back into traditional oil and gas? Like that'll be an interesting signal that we're not seeing at all now, but it's just something I'll be curious about because right now I still think we've lost a third of all investors in the oil and gas space just because of ESG and losing people money. And you know, by this time next year, I think we'll start seeing some money flow back in broadly. And I think we'll be. I've had this peg of we've got great performance. Once we get to 5% of the S&P 500, which is still a lot of performance from here, then you can't ignore the energy sector anymore. And one of the things that we're trying to do, and what I think will happen, is the energy sector gets redefined, and it won't
Right.
just be oil, gas, refining, midstream, the integrateds. I think that some of the, energy transitions companies will start falling into our sector. I think some of the technology associated with the transition will fall into our sector, and that'll broaden the space just from what the traditional, quote unquote, energy vertical is. Um, and I think that'll change the profile as well, because investors are going to be more broadly looking, not just in this one narrow vertical. They're going to look across the best ways to power the economy overall. So
Yeah.
that's so hopefully we'll have energy independence in a lot of different ways, and we'll break out of this trend of just being seen as a dirty sector,
Yeah.
and
Well,
actually
it's
seen
it.
as
Yeah, it's interesting. I want to talk about. I think this is good. We've had ESG standards on here, and I think this is a good segue into that
mm-hmm,
because we talk to investors, we talk to private equity, we talk to some institutional, and we talk to family office and others, and they all have different kind of motivations. And I've got a 2-year-old walking in here in a second. We'll see how quiet these kids are. But anyways, basically, what we're seeing is that it's interesting around the different themes. You've got kind of this decarbonization theme that you're seeing that a lot of the private equity people are trying to chase, or this capital people are trying to chase. And so, what does that mean? And then it kind of gets into the definition of what is ESG, what is,
mm-hmm,
what is this capital really targeting? And I think it's so broad. And so that's why I wanted to talk about it. I wanted to talk about the definition, who sets it, and what it really means. And so, for example, I'll give you something we've looked at a lot recently is this theme around electrification in the oil field, and how do you reduce, your emissions, scope 1 emissions, or
mm-hmm,
in kind of producing oil. And you look at like the Permian is a great place to look at. Are there ways to make it reduce carbon within the Permian, but to still produce oil? And so what you find is that some investors are open to that, and they say that that falls within their mandate. Other investors say, well, no, that's perpetuating carbon because you're producing oil, and we're looking for investments that reduce carbon. And then you have this kind of logic where you say, well, but guys, yeah, we'll go in the water here in a second, man.
live
Here, just give
video.
me a few minutes, and then we'll go in the water. All right, we're gonna jump in. Sorry, I got a
No
2-year-old. He's
worries.
about to turn 3 here in a minute. But he is very much wanting to get in the lake. But where I'm going with it is basically it's just viewed differently by different people. And I think that, some people view that as, and what my response is well, this oil will get produced somewhere else. And it's kind of that carbon
Mm-hmm,
leakage. And so it's like, can we make it less carbon intense and produce it here and make it cleaner and better because the oil is still going to get produced? We still need to use it. Or are we just going to say no investment here, which the logic kind of concludes that it'll push to other places that maybe aren't as environmentally friendly as us? And is that better or worse? I don't know the answer. But that's some of the things we see with these different investors. It's like some people kind of have the mandate to make what we have here in the US cleaner and better and less emissions. And then others are just saying we can't touch it if it has to do with producing oil. And then you kind of respond with, well, does that just push it to somewhere else? But anyways, that's some of the themes that we're seeing when we talk to
mm-hmm.
investors. But I'm just curious around your thoughts around what is ESG? How do we define it? Who are setting those standards? And how is that going to evolve? Because it just seems like the definition in and of itself means a lot, because that kind of defines what this energy transition is really going to be.
No, I think equity and social is going to become a bigger part of the mandate as well, and that gets into like how and well people are able to, you know personally develop and move forward. As we think about ESG, like our investors and our institutional clients have been working, on ESG for a very long time. I think the mandate, though, actually gets a little bit of, trying to think, I'd call it almost greenwashing, but that's a little too negative. Like and some of the ESG funds like don't necessarily hold things that I would consider to be, really clean. So like there's this great idea
Right.
of environmentally, socially, and governance improvements in the way that investors work and encourage companies to get better. Like no one will argue against that. I think that the issue is like you said, how do you define what is good and what is better? And a lot of the ways things are defined, there are multiple different MSCI indices, the SASB process, and all of that is set up and funded by investors. And so there's, the companies then get rated, but the reality is that the investors are the ones that are paying for it. And you always have to follow who and where the money comes from to understand where the mandate is going. And BlackRock is, and I think we talked about this before offline and online.
Yeah.
BlackRock is a big funder and a big client of the MSCI index, and
Right.
BlackRock is probably one of the biggest. Couple, I guess it was 3 years ago, really went hard and really went against anything that was climate negative, and also looked for investments that were going to benefit from climate change. Some of the make big investments in like effectively pesticides for insects that are going to grow more likely as the world warms. Like some of the insurance
Right.
companies that were exposed to hurricanes and that type of damage, they went out of and went into better reinsurers that didn't have that exposure. And so they were thinking not just in the energy sector, but very broadly of like climate is going to be something that needs to be impacted. Well, they took a very negative stance towards the oil and gas sector. And that then influenced the rating agencies to think through what that stance would be as well, because they were the people paying for the ratings.
Right.
And I think that's where we're trying to rethink through things, and some of the stuff that we're doing with our announcements next week. We'll have kind of a whole lot to talk about on the ESG front. Because it's a critical part of our business, and it's a critical part of how investors should be thinking. And it's a critical thing of the oil and gas sector. I've said you either take a seat at the table and try to improve, or you're going to be served and eaten
Right.
alive gradually. And like the reality is our sector does a lot of things to improve. And Exxon's Investor Day next year is going to be totally different with the board shakeup. But I think we're going to hear a whole lot of how they're trying to get cleaner from a technology standpoint while continuing to produce oil and gas the same way Chevron has been. It'll be shocking to me if they move more the Euro stance, which is move away from oil and gas altogether. But that's where the environmental side wants to take things, and definitely puts our sector and the thing we've focused on for a long period of time in a negative light. And the reality is all you can do is tell your own story. Try to get cleaner, stop flaring, have a cleaner cycle. I do think the Permian is a good place for wind and solar and electrification and off-grid usage of natural gas that can then actually basically electrify the oil field. I think there are ways to move in that direction. I think fleet vehicles that can be electrified is something the oil field can do. I think there's a lot of places that the oil industry is going to surprise the rest of the world. And after we have some news out next week, I look forward to talking to you next Friday again. I guess we can release that pod that we recorded back in May
Yeah.
as well, so we'll be able to kind of get that out there and see if we've gotten any better at this. But I know you've got a too soon to 3-year-old that wants to get in the lake, and
Yeah. My wife pulled them away. They got back over to another. They're throwing rocks now in the water.
okay.
So I got a couple
you
minutes.
got a reprieve.
I got a reprieve. He came in and there was not much he could do. He's pretty strong-willed. But no, I think it's interesting. So we had an opportunity that we looked at. There was a company that we really thought was amazing. They just doing an incredible job, and they are kind of in the OFS space, and it was an electrification theme. I'm not going to name the specific company, but they were just crushing it. And the product that they put out did in fact help produce more oil. It was very much correlated to pumping more oil out of the ground, but it was reducing Scope 1 emissions dramatically. I mean, I think it was the equivalent for one of the product that this company creates, without getting into the specifics, was equivalent to about 750 Teslas for one of the units that this company does. And they were doing hundreds a year. And so when you looked at the total Scope 1 emissions, Tesla has this counter on their website that shows how much they've reduced over the life of the company. And this company in the oil field was, just blowing them out of the water. Not even close, night and day, reducing more Scope 1 emissions. And it was really interesting to see the reaction from the capital side, because I think the initial response was, this is really good. and then you talk to some, they gets up to these higher kind of institutional level LPs and endowments and things, and they were like, this is terrible because it's producing more oil, and it's actually more efficient at producing oil. The product was a better product. And so even though it was lowering Scope 1 emissions dramatically, better than Tesla, the fact that it was perpetuating oil production and making it more efficient and easier to get out of the ground, that was viewed in a negative light. And so it was a big scratching our heads moment where we started to question, what are we doing? What is the actual objective and goals? And so when you think about ESG standards, it's a really fascinating thing to me, because it's like, it feels like a moving target, I guess. And
Yeah, no, that
you know what I
sounds
mean?
like that company needs to be introduced to what we'll be doing, because for first things first, they ought to have on their website how much carbon emissions, like
They're doing
side
it.
by side with Tesla's,
Yeah,
and
they're
like,
going to.
and
That's where they're moving.
just show the story and tell your story, and that's all you can do. I don't think that um, every investor is going to move in the same direction of
Right.
not wanting to make that cleaner investment, just because it's adjacent to oil. So I think there's going to be some opportunities for that type of company, and I think electrification is a huge boon and benefit for the oil field. And it's something that, big projects are what the oil industry does well, and there's going to be a ton of big projects that need to be invested in, as we make the energy transition. And so I'm excited about it. The main thing that I'm working on is, like, let's just make sure we don't destroy capital. Like, we were looking at
Right.
a wind company called Ørsted, and their project level returns are like 6 to 8% unlevered, and they're hoping to get to teens for the offshore. And they're definitely moving far forward with the New Jersey offshore wind projects. But like, what's interesting to me is the company you just talked about, I'm sure, has project level returns that are multiples of that before leverage.
Oh yeah. Oh yeah.
And like that gap has to be closed, and is going to attract investments. And so cleaning up the oil field is something that's where things are going to go. And kind of cycling things back through to Independence Day, like, you go back and just think about, like, what we can do, not just for the U.S., but for the world. Like, we're leaders, and our biggest skill is being entrepreneurial and trying to move very quickly and take risk. It's not necessarily the tech development. It's not necessarily the oil sector. It's like that, our Americans tend to want to take on risk, and we have a lot of entrepreneurs that do that. And we just need to make sure that smart people like the company you just talked about get the capital they need to take that risk and get the capital deployed. And that's what my aim is, and it sounds like yours is as well. So I'm
Oh
excited about where things are going.
yeah. I think it'll just be, to me, the reason why I wanted to talk about it, and I'm sure we'll talk about it later on in other episodes, and I'll probably end it here soon because we are both on vacation, and we got to take a break from work every once in a while. But I think, to me, the part that's fascinating is, number one, who decides, what it actually means, and then number two, how does that shape the capital flows, and then number three, which is maybe the most important thing in my mind, was is actually make things better, right? Like, there was this Wall Street Journal article that came out, and I think I put it on LinkedIn, and it talked about how the mandate has gotten so wide because there's so much capital chasing the green movement or the ESG movement, that companies that were considered a couple of years ago to be some of the dirtiest, worst environmental offenders, like, for example, deep sea mining companies like that, now have raised billions under the green umbrella. And they're saying now they're this energy transition company, whereas any time before this part in history, they would have been viewed as one of the things that environmentalists would attack. And so that's just almost kind of paradoxical to me. And so, and it's not just mining companies; there's a lot of other industries that are falling into this bucket. So it's a fascinating thing that's happening, and it affects me at the business level, and also just at an intellectual level. I love following this stuff and seeing where it's going to go. What I'll end it with is that I just hope that the decisions that can be made, where the capital can be allocated, actually achieve the goals that make things better and more efficient, for the environment in general, and not just for the global macro climate environment, but also for the local environment, at the site of operations. And from there, it starts at the site of operations and personal property rights, and then it moves all the way to the climate and the planet. But are we actually doing things that are going to make a difference or be better, or is it just so opaque and not defined that, to your point, it ends up, number one, potentially wasting capital or destroying capital, and then number two, not achieving the goals? And so I'm very focused on it. Let's just end it. I'll just say that.
Well, and I think as we move forward in my business and kind of the thought process, like I think we'll be helping define some of those standards around how the energy sector fits within ESG. Like, what are the expectations? Here are the 6 different ways you can be measured,
Right.
and the 6 different indices. Like, well, what are the best ones and what should be used? And then, we can also bridge to investors and say, y'all have thought about it this way. Here are the actual quantitative and qualitative ways that you can take these metrics and deploy them. The thing that we haven't seen yet, and the thing that we're trying to figure out, is what do those metrics actually drive share price performance? And
Right. Yeah.
just because you have access to capital doesn't mean you're making good investments. And so, that's what we saw, and I just see this opportunity why the oil sector, and the oil shale revolution that we saw. We saw a lot of management teams put money into things that they shouldn't have and overcapitalize some, and we're going to do our best to draw, really clear and, things out into the sunlight, as I'm sitting in the sun now.
Yeah.
Because the light of day is what's going to let people see where things are going and how they're going to get there. And, the energy transition's happening, the oil sector is going to keep going. But the reality is we've got to have better returns in the oil sector, and we've got to make sure that the energy transition doesn't destroy capital the same way we witnessed over the last 10 years. And if we can do those 2 things, and our 2 businesses kind of overlap a little bit on the private and the public side, hopefully these pods will we'll be able to actually put up some slides and give people some data and some links to actually go to, is where I see things going with this over time, and then bringing some people on to interview them as well, because there's going to be an opportunity to define what ESG means, because neither one of us could define it today, and we both have thought about it a lot. And that means that there's an opportunity to make that definition however we want it to be, and in the best way, for the industry. And that's something I want to do. So.
Yep. Well, we can end it here on this, and I think this was a good one, and as good as we can do in terms of us both being on vacation and just trying to give it our best here. And what I can tell you is that I think there's a guarantee that it'll be, at least in my opinion, and I think in your opinion, fascinating to watch and to analyze, right? So that's at a minimum. We know that how things are going to change will be really fun to follow, and hopefully we can do a good job covering it. And to your point, getting other guests on, we need to work on that. Let's talk about it offline. But thank you for your time on vacation in Hawaii, and let's just let's keep at it. And next week will be an exciting week, and we'll get the podcast out, and that'll be fun. I'll get that we'll get that launched kind of the beginning of next week, and we'll keep going here. This has been fun. I've been really enjoying it.
Sounds great. Yeah, me too. Good talking to you.
All right, good talking to you. We'll see you.
Bye-bye.